name is David Ray. I'm the President and CEO of Dundee Precious Metals. Happy to be here at the conference this year. As an organization, we've had an excellent year. We've been producing basically according to our guidance. That's been at a low all-in sustaining cost number of $707 per ounce. Right on target in terms of what we've produced for guidance, and as a consequence generating significant free cash flow and an accumulation of $707 million by the end of the last quarter. We've also been delivering on our organic growth portfolio, and particular success in Serbia with our Čoka Rakita project. So we just recently announced some new results on that, and it continues to be very exciting. We're also continuing with our other activities, and I think most prominent in those is exiting the smelter as one of our core assets. That's allowing us to focus on our core business, which is gold production.
David, good to see you again. And here we are in front of the same tree. Some things don't change. What has changed, your share price. You've had a spectacular couple of years now. You're attributing that to a little bit to the gold price, but also what's going on the ground. So what's been the sort of primary focus for you since I saw you last?
I think if you go back to the start of last year and you look at the share price, we're at about $6.50 per share. And now in a number a little north of $13 per share. Certainly gold price has helped with that, but it's also been a good performance in terms of our organic growth portfolio, and particularly Čoka Rakita. And that's where we saw a particular response. Continue to work on that, continuing to find more. I think people are starting to realize now that we're starting to get to value here. It's not just speculation anymore. We really are finding something that we can build on. The combination of all those things is giving us the performance on our share price at the moment.
Absolutely, but the market always wants more. And I think you tried a few things this year, which I think are quite interesting. You mentioned one of them, mostly offloading the smelter. But it's taken a while. Those things take time. Tell me what's going on there.
The smelter is an interesting asset. You've got to find a company that has the right ambitions, and we're very fortunate to be able to do that.
Yeah.
We had to cast the net very wide in order to look at a company that's not just looking at the concentrate business, but more than that. And it's the type of thing where history over time has accumulated a number of materials out the smelter where you attract other companies, and it really makes the business much more robust going forward. So, we managed to attract somebody that we think has got the ability to provide continuity and new opportunities for the smelter.
And tell me the construct of that deal looks like what for your shareholders?
So for our shareholders, it was a $15 million deal. You would have seen that change between the original announcement and the final number. And where we are at the moment is that we have a 4-month period whereby what we do is we cover temporarily the operating working capital for the smelter, and we'll exit the smelter completely at the end of the year.
Right, so the original number was sort of just sub 50 million down to 15 million, and you're going to contribute, to the kind of initial start-off period. Why is that good? Is it a case of get it off the books so you can focus on what's important?
Absolutely. The most important thing was, we've developed a lot with our smelter over time, but it was pretty clearly distracting us from our core business.
Okay.
And that was the main reason why we made the change that we did.
Right.
In terms of the difference in price between the 49 and 15, that's down to the conditions in the market over time, where it's been very poor for copper concentrate TCs and RCs. So we reflected that, and in terms of the 4-month transition, that's really providing temporary support, buying the material in the concentrates for a 4-month period, which then allows Sinomine to be able to make its investment applications to be able to cover that from its Chinese funds.
Right, so focus and release of any liabilities associated with.
From our point of view, absolutely.
Fantastic. Okay. The other thing that you did at the beginning of the... So I'm starting reverse order here, I hope you don't mind. We're going to get to the good stuff, which is obviously the Asino transaction, which was sort of nearly there, but not quite. You step back a bit. So you're on the M&A trail. Clearly, you told me that last year. You almost got something going there. Talk to me about the kind of profile that you're looking for and the reasons why you wouldn't maybe go to a bidding war, which is never sensible, I think.
Well, the intent is to try and avoid a bidding war because we're looking to have something that's NAV per share accretive.
Yeah.
It needs to be something that's attractive. So typically at the moment, that's anywhere north of 150 to 200,000 ounces per year, more than 10 years of mine life, and ideally significantly more. And then looking at something which is going to be ideally first quartile costs, but below first half for sure.
Right, and let's talk about that, because it's obviously quite busy out there. There have been some transactions, mergers of equals, or people phrase it in different ways, but basically it's the same thing, is it? Some shareholders walking away with a stack of cash. People think it's easy. It's not. There's a lot of companies out there that look like they're right for acquisition. They don't all perform the same way. They don't all meet your own profile that you're looking for. Obviously, I think we'll see some more. Producers have a lot of cash at the moment. How do you read the landscape out there in terms of the available options for a company like yourself?
Yeah, quality is a bit of an issue.
Yeah.
There's a number of assets available, not necessarily producing, not necessarily in the right places. So starting with quality, you need to figure whether the risks, whether the upside opportunities, whether we can actually bring something, is something that's really important. So, I think there have been a couple of transactions where it's not obvious what the synergy value is that's brought. We're very definitely looking for something where what expertise we can bring can start at a number but increase performance both in terms of production and all-in sustaining costs. So that really does narrow the field quite a bit.
It does, and obviously, cliche, cash is king. But it's what you can do with that cash that people look to you for, right? So in terms of that distribution of cash, I think dividends are being paid, there's been some share buybacks, etc. But for you, what are you looking to do? If you were aiming for, the 2025 profile, what would that look like for you?
We look at what we do with our capital between a number of different windows. So one is obviously to reinvest in the business, to keep improving on our performance. Another key part of that is investing in our exploration opportunities and perhaps looking a little earlier stage than we have historically at some companies. That's been very successful. Obviously, Čoka Rakita would be a good example of that, where we've been spending a little over $40 million last year, a little under $30 million this year, and getting good results on that, so getting good returns. But of course, on top of that, we got a sustainable dividend, which amounts to about $30 million per year. And last year, on top of that, we returned $66 million in buybacks. And this year, we're talking about $33 million between the $15 million and the sort of balance to that 33, where it's the dividend at 15 and the balance is buybacks. And basically, what we're doing is we're looking at our performance on our trend, on our cash position. And wherever there's anything in excess of what we believe that we should be reinvesting in our own business or putting into M&A or other activities, what we do with that is look towards buybacks.
Right, okay. And obviously with exploration, there's also a kind of cap there in a way. It sounds easy to go, well, we'll double, triple our exploration. Organic is cheaper always. It has to move at a certain pace because you need to assess the data to be able to move forward, etc. So what are the kind of the extreme limits of what you're going to be able to do in dollar terms or meter terms?
Yeah. So I think historically one of the things that we have done is we've been quite conservative. We've put an amount of effort into targeting, and then we've done a certain amount of drilling and then really stopped in order to look at, okay, how should we sort of target? And I think we've decided to be a little more aggressive this year, and it's clearly working in terms of Čoka Rakita. I said this year, but actually over the last couple of years. Yeah. So what we're doing basically is saying there's an amount of work that we want to get done, and let's just go at it. And then what we've had to do is we've had to increase the amount of drilling capability that we have, both internally in terms of supervision and then externally in terms of contracting. So if you look at Serbia as a perfect example, that started with one drilling contractor who was primarily supporting what we were doing in Bulgaria. Then we had two contractors, which was Serbia and Bulgaria. Now we have a third contractor coming in from Romania. Yeah. So in terms of what we can do, we're talking about, just in Serbia, for instance, about 35,000 meters in each half of the year. So north of 70,000 meters per year. Yeah. If you go back probably 18 months ago, we're probably at about 75% of that. So in terms of spend, we could probably at the moment, between our assets, spend something in the order of $70 million a year. But at this point, we're looking at something that's sort of within that sort of $40 to $50 million, because that looks to be something sensible in terms of what we can internally justify. Yeah. And we're getting the right returns.
Right, and then let's look, obviously your job at all times is to make sure that the resource and the reserves are kept topped up, or if anything, growing. Can we look at the type of exploration budgets that you've set yourselves?
Yep. So typically what we'll do, the number that I mentioned in terms of meters includes a couple of different things. So that would include Serbia, it would include the 10,000 meters that we did in Ecuador. Yeah. It would include 40,000 meters that we've got underground at Chelopech, plus potentially as much as 20,000 meters in Krumovgrad. So all of those are in the mix. So the main thing for us is to make sure that the resources that we have and the targets that we have are being appropriately weighted to maintain and ideally increase the reserves and resources, particularly at our core asset at Chelopech, while developing our organic growth portfolio, and that's primarily Serbia. But it's also being ready then for the release of our resources in Ecuador, where we're anticipating once we get through the court ruling requirements, which should happen At the earliest, at the end of this quarter, maybe into the next quarter, we'd anticipating going back at least for Loma Larga, doing some additional drilling.
Okay, and just sticking with the, if you don't mind, the kind of expansion of ounces, we come back to the type of acquisition. I think most companies accepting they probably have to come slightly downstream, as it were, or upstream, as it were, in the sense that maybe all the producers aren't born equally, and maybe they don't suit your profile. So perhaps some of these more advanced development stories that we see out there, who could do with the money, who could do with the help and expertise around actually building mines, etc. Again, are there enough of those out there that perhaps will meet the profile for you guys?
I would say if you look at the last couple of years, until we really had the success we did in Serbia, we were thinking about a number of different approaches, and that would have split the potential to go after a producing asset from the potential to go after a late stage development asset. I would say with where we are now, we're looking at things which are actually earlier stage, which are going to contribute 10 years plus.
What does that mean? Just describe what's earlier stage?
So what we're talking about is something where there's a particular opportunity that we recognize that we can bring some value to, that it needs some financing, which we think can grow to the type of asset that we can deliver. But you're talking about something that's maybe at a PFS level, PEA level, that type of thing, so earlier. And at the other side, looking at something that's currently operating, where we believe there's a particular opportunity for us to take some of the things that we do underground and some of the things in terms of efficiency and productivity, which could make a difference to that performance and the margin that's being generated. So it could be a tonnage, it could be an all-in sustaining cost, it could be both. So we're looking more from that late stage development, more towards those two ends, current producing asset and something early.
So there's a few more of them and a little bit less competition. No bidding wars is what I'm going at.
I think people are more focused later stage and further downstream. There's a couple of companies that's always made investments in early stage projects, but I think that tends to be in very specific locations. So I think there is an opportunity for us to participate.
Right, and locations, jurisdictions,
Canada,
are big topic at the moment. Obviously, we'll talk about Ecuador in a second, but how are you reading the landscape with regards to jurisdictional risk at the moment?
Yeah, I think in Ecuador, we've made more progress in the last 6 months than we did in the prior 2 years.
Yeah.
And we're coming up to an election, so pretty clearly there's going to be, at some point, there's going to be some drop in the movement of materials. But we're very, very happy with the support that we're getting there. When I say we, the industry is getting there. And we've seen a number of projects actually be moved forward there.
Yeah.
So we have some very specific things to deliver to in terms of a constitutional court ruling. We're coming to the end of those, and we're anticipating after that being able to go back and do some drilling, which will then confirm our feasibility and allow us to make a construction decision. So overall in Ecuador, I think it's always going to be a situation where there's some, we call it a non-linear project. It's not going to be one of these things where you can be very confident of the timing, but we are confident that you're going to be able to move those projects. You just have to be a little patient in periods.
Yeah, and I think there are jurisdictions like that, but in terms of the that kind of blended risk profile for your own portfolio, Serbia is not a place too many people are aware of, but you're clearly doing business in country there, and Bulgaria probably likewise. Ecuador, I say, is non-linear. So in terms of looking at these sort of earlier stage development plays as a potential, are there any countries that sort of catch your eye, or for the right reasons or the wrong reasons?
I think absent the politics, there's many areas that you could look at. There's lots of areas in Africa that, we've got a lot of comfort in, and we believe that we can add some value. You just have to be careful about where things are in that dynamic of, there's an interest in, picking up the resource or taking additional value out of the resource. And clearly we need to make sure that we're not going to invest in something only to lose a significant amount of value.
Yeah.
So these are always things that you have to look at. The reason why we like Namibia as much as we did is just because there's a lot of confidence in the ability to go in for a timing and deliver. And that allows you to take what are lower opportunity projects, thinner margin projects, and be confident about delivering, because you're not so worried about this non-linear or variability in terms of relationship with governments and communities.
Love Namibia as a country and place to do business. Right, let's better get into the meat of this, which is obviously what's going on in Serbia. Obviously the margins look fantastic. The ability to do business on the ground. I mean, tell us about that, not just in terms of the production where you are now, but the exploration component.
Sure. I mean, Serbia, we've been in Serbia since 2004, directly and indirectly with different companies that have been doing a search for copper and gold assets. In the area that we're in, it is actually a mining area, so Bor is quite close to where we are, 40 kilometers away. So, and there's coal mining in reasonable proximity, so therefore there is a history of mining. In terms of what we've been doing, we started with Čoka Rakita. So this is an asset where we took this to a maiden resource estimate in December last year, PEA in April of this year. By the end of this year, we'll have completed the work. And between the end of this year and the first quarter of next year, we'll report on the PFS. Anticipate taking this to a feasibility by the end of 2025, and then we'll make a decision in 2026, which I'm fully anticipating will be to go ahead and build that project, which would bring it into operation in 2028. So if you look at the recent work and how does that factor into things, when we did the very early work, what we realized, if you went to depth, there was the skarn, which was high grade in sandstones we were interested in, and at probably another 300, 400 meter depth, there was marbles and limestone, which clearly had some copper showings of interest, but relatively small in the area that we looked at. So we've continued to look for that. And there's an area called Dmitry Potok, which is actually quite close, about a kilometer north, a little bit east of Čoka Rakita. And there we're finding some interesting thicknesses that we've reported on. Earliest one was in February this year, and we've just put out a new update. Now, the interesting thing here is our original concept was that maybe some local potential in terms of skarns. But what we're recognizing is that the potential for these with a number of different intrusions is that we can now look on a little bit of a broader scale and have a look at where there's an opportunity for some interaction between the sandstones and the limestones and this type of thing, and where you may get something like a Čoka Rakita. But similarly at depth, you have the potential for some significant showings of copper. So what it's done is it's opened up an area between 5 and 6 kilometers to the north of Čoka Rakita, 2 to 3 kilometers wide, where we're now targeting this additional type of showing in addition to the Čoka Rakita type asset. And there's more confidence of this being bigger than we originally thought. So it's exciting for us.
I can tell. Yeah, you're quite animated there. You are quite excited about that. In terms of then clearly the money's there to do all of the above as well. So I guess that's exciting. The optionality on there is obvious to all. With regards to the build out of a team to be able to kind of get after this and skill sets. If you're talking about coming at different types of ore bodies, etc., not just the drilling, but the mining and the processing, etc.
Right.
The existing team good enough for that?
We got a lot of capability in terms of mining and processing. Now, having said that, if you're running at a couple of projects at once, where you've got Čoka Rakita, the potential for Dmitry Potok and other assets, and plus on top of that, you could get into building out Loma Larga. So now you need to think in terms of how do you scale that. So we're already working on Čoka Rakita. So we already have the project manager and the people behind that in order to really focus on the delivery of that project. Now with Dmitry Potok, we would probably look at enhancing that. So you've got a group that can do the engineering while one group is really focused on delivering Čoka Rakita. And then we'd have to do the same again if Loma Larga does start to move, and we're getting confident about a build timeline.
Right, okay. And with regards to the balance sheet, obviously everything's looking healthy and rosy. Your institutional shareholders are probably extremely pleased with the way that things are progressing. In terms of their demands, though, because you never sit back on your laurels and go, it's fine, we've got to keep moving forward. What are they asking you? What are they, I don't say concerned about, what are they interested in terms of how we're going forward?
The types of noises that we've heard and the types of things that we're hearing from some of our senior shareholders is, okay, what are you going to do after something like Casino? So people feel that we've shown our hands, we're desiring to do something in a fairly short order. But what I would say to that is the same way that we treated Casino when we had a counter bid which was outside of our economics demonstrates the discipline. So of course we're looking at that type of thing, and we do have the capacity to build Čoka Rakita. We will have we have the capacity to build Loma Larga on top of that. And if it's Dmitry Potok and you look at the timing of that, then quite likely the free cash flows will allow us to build that out of not just the cash balance and the free cash flows without doing any more than dipping into our revolving credit facility, which is $150 million with a concertina to $250. So I'd say we really are very well positioned to be able to do a number of these things and not really have to worry about too much going to the market.
I thought that was a great thing, actually. And I know there's the kind of downside to it, we didn't get it. But what it did show was that you're not going to be forced into overspending or overpaying for something because you have a kind of framework in which to operate. So your hand won't be forced in that sense. I think that's a good thing going forward. It's then a question of which I think you've done eloquently in this conversation is what do you do with the cash instead in the meantime, and what reserve do you build up to give you that optionality. Bulgaria. The often forgotten Bulgaria.
Okay.
But some good stuff going on there too. So what's the update?
So Bulgaria is basically looking to get that as more than 10 years of life of mine. We've been 8 years for quite a long time now.
Yeah.
Time to really
for the next
move
30
on that.
years.
Yeah,
that would be ideal.
Initially, the sort of focus was on a property just to the north called Svetopedka, which you're now going to hear as Chelopech North. Yeah. So we've got that all the way to the point now where we're going to make an application for that to be a concession. So that I'm anticipating will be early in the new year. So there's some potential to add to Chelopech's life of mine, not only with the work that we're doing internally within the existing concession, but also that. And we've also recently been developing into the property immediately around that called Brevene. And we've got that now to a geological discovery. So this is part of a sequence of activities that you've got to do to take that to a concession. So, we've been focusing more in terms of pushing out internally with the concession, the reserves and resources at Chelopech, but also adding to that resource inventory as we bring along Svetopedka as Chelopech North and then Brevene. So a lot still to come from Chelopech.
And then in terms of, again, I don't know much about mining in Bulgaria. I just read up on you guys, but is there kind of a good culture? Is it the ease of business, the mining rules, regulations, etc.? There's no concern.
Permitting is slow in Bulgaria, but we know that. And we've been there for long enough. We know exactly how it works. What we like is the consistency and continuity. So even though things are slow, you've got confidence in the ability to make these things happen. Is there much in the way of opportunity? It's not as much as I would like, perhaps not as much as we have in Serbia. There's much more opportunity in Serbia.
Is it a question of factor of like the amount of data available versus what's going on in Bulgaria?
I think the prospectivity is a little higher in our view at this point in Serbia than it is in Bulgaria.
Okay. We've got to look forward now. Next 12 months, what are your hopes?
So what I'm looking forward to when we're talking next year is that we'll already be busy with the work on getting ready to construct Čoka Rakita.
Yeah.
So we are quite likely to be looking at taking the old facilities at Adatepe and dismantling those and moving those. We'll have long lead items ordered. We'll have permission from the board for the capital to go ahead with construction, and we'll have been busy with that from about Q2 next year. So in terms of the other things that we're doing, of course, within Serbia, we'll also be looking at Dimitri Potok, and we're actually working our way up north back through the area where we had the Timok prospect. So this is Dimitri Potok, Frazen, Chocolate, back up Bigger Hill and all this type of thing. Part of that 5 to 6 kilometers that I was talking about, 2 to 3 kilometers wide, and anticipating that that's going to feed into the life of mine beyond Čoka Rakita and potentially an add-on to Čoka Rakita. So something that starts a little later, but it does extend the life of that asset beyond. What else are we going to be talking about? We'll be at that point, I think, further ahead with Loma Larga and clarity in terms of when we expect that to come online. And I would anticipate that if there are opportunities in terms of M&A, that we'll have realized those opportunities.
Okay, and final one. How big institutional following, but for those retail family offices who do like to get after producers, how do they look at you? Dividend paying stock, clearly. Growth stock, because as you get bigger, you whatever 2.5 billion. What are we at the moment? It's a big number. It's harder to grow at these levels. They do have a tendency to plow most of the money back in the ground. Typically, big companies plow money back in the ground, and for shareholders, it's hard to kind of see where the value or the growth's coming from. For you guys, obviously, you're addressing a lot of those issues there, but is it slow, steady, accretive growth? That's who you are, or do you think with an acquisition, that's the kind of stepping point that really delivers growth? How should I view you?
I think a lot of it comes back to what you talked about. What do you need to do in terms of resources to be able to realize these projects? So clearly, free cash flow, cash balance, that puts us into a very strong position. But a lot of projects these days, you've got a situation where you've got an aging population with expertise within the mining industry, and they're retiring. So what do you do in order to reverse that? So I think from our point of view, we've got some great people in our organization, but we also have the ability to generate new talent that is coming in. So I think we have the opportunity to populate new facilities within the organization as either projects or new acquisitions, and really have us be the very steady delivery against what we commit. And that's going to be a growth opportunity rather than steady. Plus on top of that, we're going to be returning free cash flow. And I think our demonstration of how we do that, disciplined acquisitions, making sure that we're not just sitting on money, we're actually doing something with it. I think that should start to factor in to the idea that we don't have the scale as some of our competitors, but perhaps we stand out because of that ability to deliver growth, but also return cash to shareholders.
Okay, so a creative but ambitious.
Yeah.
Great. David, lovely to see you.
Thanks very much.
Cheers.
Nice talking to you again.